All right, let's do this. Good morning, trade pros. Welcome to morning market update for this beautiful Wednesday, September the 18th of 2018. This is George Papazov from Trade Pro Academy. Adjust the camera a little bit, and we got a great update for you today. Another historic moment yesterday, the first event occurrence in 10 years. I'll explain to you what it is. After a morning market update concluded yesterday, we heard the news about this new event that the Fed was doing called the Repo. And I mentioned to the trading room, like, this is a significant thing that I think is going under the radar. A lot of market participants in the stock market was kind of shrugging it off. We'll talk about that today. First and foremost, today the Federal Reserve is expected to cut interest rates by 1/4 of a basis point, although the odds of a rate cut have significantly declined. We went from 13% or even 5% a month ago, expectation of a hold, to now over 53% as of yesterday, meaning that more people are expecting no rate cut today, given the recent developments. We'll talk about them in a moment. Market participants are still expecting a cut, but the odds of a cut have dropped. I do still think the Federal Reserve provides one more interest rate cut, and it'll be an insurance cut, meaning that they want to support the economy, or what they call a mid-cycle adjustment, and then they're going to go from here to be more data dependent. I don't think we get another 2 rate cuts for the rest of the year like was expected before, just a couple of weeks ago. And we have one more rate cut, and we end 2019 on that note, and we wait for more data. Of course, if there's a huge crash, then there's going to be more cuts. But today, Jerome Powell and the Federal Reserve are releasing their meeting minutes and interest rate decision at 2 p.m. Eastern time. Elite members, we will be trading this together at 1:45 p.m. Eastern time. So the elite members in our team and our community will open up the elite room at 1:45, prepare you for it, tell you what we're expecting, what could be the market movers, what to watch for. Then we'll announce the actual statement in real time. We have a great squawk service that keeps us right on top of things. 30, we're going to trade any opportunities from the press conference that starts with Jerome Powell, and that in itself mostly will cause the most volatility. All right. In the meanwhile, from the last Fed meeting, economic data in the U.S. has been stronger than expected. All right. But so what the Fed will be doing here by cutting in a stronger economy or an economy that's upturned is to once again provide an insurance cut on the back of slowing export growth from China and a potential impact of importing more expensive goods to the United States. That's the fear. The fear is this trade war that's been going on. All right. And also on top of that, Brexit and other geopolitical issues, the Saudi Arabia bombing, and a lot of things have come up. So they could potentially justify a rate cut. Here's what I'm going to tell you, though. Yesterday, there was a repo rate. None of this matters. I think today's rate cut won't matter one bit to the market. I'll tell you why. Because rates have already gone up. Check this out. The Federal Reserve sets something called the FFR, Federal Funds Rate. And if you and I called the Fed to borrow money at that, we'll probably go to an automated service. If you're retail, please hang up. You have no business calling us. What I'm trying to say is we can't get this rate that the Federal Reserve publishes, the FFR. The rate that drops on the newswire and we all trade based off of, that's not accessible to us. The only people that can access that rate are the banks in the banking system connected to the Federal Reserve. All right, so what they do is their interest rate actually isn't 2% at the moment. 2% is the lower band, 2% to 2.25 is a higher band. That's why when they cut rates, they cut it by 1/4 basis point, but they actually cut the band. So if we cut today, we're going to go to 2 even to 1.75. That's where the interest rate will land. There's a band because at the end of the day, even though the Fed sets the rate, they have to enforce it in the open market through their open market operations and through the FFR and the lending that they do to institutions. All right. The actual rate that banks borrow at and then lend to one another is called IOERR. It's not exactly that, but for simplicity's sake, let's keep it there. I can do a whole webinar on IOERR alone. It shot up 10%, which means even though they could borrow from the Fed at a 2 to 2.5% rate, between banks with one another, they were lending at 2.25% at the top end of the band. In an ideal system, the Fed wants to see the rate directly in the middle, so it'd be 2.15. That's a middle point between 2 and 2.25. But that repo rate, or it's not actually a repo rate, but the rate, the IOER, was at the middle of the band, and it skyrocketed higher to the top of the band yesterday night, not last night, but yesterday's evening. And what that suggests is the Federal Reserve is actually losing control of the interest rate. All right. Their goal is to maintain an interest rate, and they could do that through printing money and buying bonds, selling bonds, etc. This indicated they were losing control of the interest rate. That's not a good thing for the market. And I want you to know this, even though the market's expecting a rate cut, it was already towards the top of the band. So the market's already pricing in higher interest rates. I'll tell you why in a second. All right. It has 100% everything to do with the Chinese trade war and higher input costs coming in. All right. So let's talk about these rates increasing on the IOER. What it creates is a shortfall in funding for banks. The banks need liquidity. So there was actually drying up of liquidity. And as the IOER skyrocketed higher, there was even less liquidity. So what the Fed had to do is a repo. They said they were going to do a repo in the afternoon. Then they canceled it 5 minutes before. And then right at the top of the hour when they were supposed to repo, they announced it anyways with their banks. Who is involved in a repo? So the Federal Reserve has designated about 12 banks as what they call primary dealers. And their primary dealers are obligated to buy and sell whenever the Fed makes a move. That's the agreement that they have as a primary dealer of the Fed. All right. So what a repo basically is an attempt from the Federal Reserve to provide excess capital or liquidity to banks so the interest rates could go down because they're at the top of the 2.25 band. And so what a repo essentially is, you call all your primary dealers and you say, hey, I'm going to buy $53 billion of bonds from you. Okay, think about this. If I purchase a bond from you, you give me the bond, what do I have to give you? Cash. All right, so this is how the Federal Reserve injected liquidity yesterday on an emergency basis for the first time in 10 years. This is very significant. This is the first time we've had a liquidity scenario where the Federal Reserve has had to intervene. So I would say that the repo yesterday was more important than any Federal Reserve announcement today because the banks and the free flow of capital is already pricing in higher borrowing costs. Let me tell you why very quickly there was a liquidity scenario. There's a shortage of US dollars, all right? And in addition to that, the goods coming in from China are coming at a higher input cost, which is inflationary, which pushes prices up, which also means the interest rates go up. The thing that China and US had going for each other is the US was able to import from China low inflation, low interest rate environment to create all this debt so they could fuel growth. But at the same time, they exported their manufacturing jobs in return for that. That was a relationship traditionally. So that's all I'm going to explain to you. That repo yesterday was huge. If you want to read about it, there's a lot of resources explaining how exactly it went down. It's basically an auction. The Fed went out, bought $53 billion worth. They're prepared to buy up to $70 billion, whatever it took to punch the IOER down. Everybody's watching that today. All right. In other news, in Saudi Arabia, they yesterday had a sharp reversal on crude oil news. We were in the room trading it. I was looking for the long trade. I got stopped out, and the news came out that Saudi Arabia said that they've restored a lot of their output, and they're going to restore it all within 1 to 2 weeks, which is really shorter than expected. Which means what? When the news came out, the Saudi Arabia was bomb. We're trading 55 crude, went up to 63. Now we're trading 58. So the price will have to come back down somewhere closer to 55. Huge sell-off. We started to get short in the room, and everyone crushed it. One of our traders out-traded us all, and it was amazing. Huge gains, somewhere about $2.30 per one lot. And I know he wasn't trading a one lot. That's $2,300. Multiply that by 6-7 contracts, whatever they were trading. All right. One of our other traders was trading full size on 10 bangers and picked up a lot of money. It was just a huge day. It was a 5-figure day for sure. Great opportunity in oil. This is what a news squawk does for you. So the prices of crude oil are back down on WTI now to 58.77. Currently trading even lower than that, 58.34. Sell pressure off the opening bell in crude. Saudi Arabia said they're going to fully restore output by the end of September, which is way shorter than anyone forecasted. All right. Energy minister in Saudi Arabia said that they managed to restore supplies to customers to the levels they were before the weekend attacks. How could they do that? Saudi Arabia tapped into their reserves. For a country that exports that much oil, you have to understand they've built reserves, right? Barrels in the ground stored. They're tapping that reserve just so there's no disruption to the supply. That's super bearish news for crude oil. The only thing that would prop it up bullishly at this point, for it to not get all the way back down to 55, maybe stabilize around 58 to 57.5, is the fact that this happened. And will it happen again? All right. What are the mechanisms that are preventing from another attack happening? Because it wasn't supposed to be this easy. There's missile defense systems. All right. That's what's pushing crude down today. Yesterday, we saw a surprise increase in inventory on the API report. Today, we look at the U.S. Department of Energy's report at 10:30 a.m. There's going to be a huge opportunity in crude oil, and I invite you guys to trade it with us. On a news inventory day, you can make more money in 1 hour of one day than your whole weekly income. Some weeks, even your whole monthly income. Very opportunistic. I invite you guys to trade it with us in the room today. Also, this Friday at 2 p.m., I want to make a huge announcement. Our good friend and also amazing futures trader Anthony Drager will be in to trade with us in the office. Friday morning, he'll be on the morning market update with us. And then Friday at 2 p.m., we're going to do a live Q&A session. So if you want to ask me or Anthony Drager any questions, he's a former floor trader, prop trader as well. So he's got a lot of insight on the industry. If you want to ask us anything, we're going to make that available to you. Open dialogue. You guys could ask us literally anything. We'll answer it. I urge you to take advantage of that. The link's in the description below. In Asia, Japan's down 0.2, Hong Kong's flat, China's up 0.3%, India's up 0.4. In Europe, at midday, markets are flat. In the United States here early on, markets are flat as well in anticipation of this Federal Reserve meeting in the afternoon. Expect lower volatility today to start the session in equities. I think today the opportunity is in oil. All right, crude's down 1%, gold's flat, Bitcoin's holding around 10,000. 10:30 we have 8:30 we had housing starts. 10:30 we have Department of Energy or the EIA petroleum inventories report. This is the crude oil inventory we always talk about. 2 p.m. we have the Fed announcement, and then 2:30 we have a press conference as well from Jerome Powell. So huge day today in the markets. Today you need to be trading in a community. I don't care if it's not ours, but you already listened to our morning market update, so it might as well be. You need to be a part of a group today. If you're trading in the corner by yourself, it could get really dangerous if you have no accountability and no feedback mechanism. So I love you guys. Have a great rest of your day. Get prepared. A lot of volatility is coming out today in the afternoon in equities and early on for crude oil for the inventory report. Have a great day. Send you love, joy, and happiness. Manage your risk and trade like a TRADEPRO. I'm going to turn around and open up the trading room. Huge morning market update. A lot of info to disseminate. I had very little notes. Take care. Bye. All right, Trade Pros, the room. We're going to kick it off by sending it over to Atlanta, our oil desk, and they're going to give us an update on the latest for crude. Then we'll bring it back to our head office here and talk about oil or about equities. So let's get started, and let's do this. Thank you, YouTube. Have yourself a great day. So if it's back up. Okay, so the problem, Victoria just checked, this is important. Victoria just checked the FOMC FedWatch futures, and the probabilities have shifted back up to a 63% rate cut. And I think the reason that could be is because the IOER has floated so high up to the top of the band. They want to cut the rates and drop the bands lower. But I think, there is a high likelihood. I think they cut today. All right, it's going to be the last cut of the year. But yeah, that's good to know. And up 63% probability that they will cut. So the odds of a hold have actually dropped. You guys have a good day. Watch this report, trade it, join the room. If you're an elite member, we'll trade it together. Have nothing to worry about. We do really well in these reports, and we keep you guided the whole way through. Take care. Have a good day. Thanks, Vicky, for that update. Boxy, over to you for real this time. Andy, I agree with you. The U.S. is the largest oil producer, and Saudi Arabia is third largest after Russia being second. And it doesn't change the fact they have a huge reserve of barrels, and they use it. They're using it at this moment to offset supply disruptions. Bearish for oil regardless. But yeah, great point. Take care, guys. Have a good day. Bye. Boxy, I'm going to add you here.